Hey guys, how's it going? It is Friday, July 24th. It is the end of the trading week. It is exactly 6 p.m. and I'm going to leave this right here just for a few seconds. Come on, how is that not your favorite GIF right now? I think I'm going to try and make this into my avatar. I have to incorporate this into the Discord server somehow. But I'm going to play it one more time just because I love it so much. I didn't make this, but I'll put the username that I found this on Reddit from to give them credit. But I think the only way this GIF could be better is we're not doing AMD justice by having it all pixel graphics. I think this needs to be in glorious 8K HDR running, premium AMD CPUs and GPUs, but I think this is just amazing. It's pretty good. It's very well done. I like the art style. It's just cool. But almost looks like someone wants to turn this into a video game. But let's get into the market. Overall red day, right? I mean, a lot of red on the board. Big tech also pretty much sideways, but sideways in the negative, right? Google down 0.5%, Facebook, Apple, Microsoft. The only thing in terms of big tech that was green was Amazon and Nvidia. And my good old friend AMD up 16.5%. Absolute insanity. Absolutely crazy. I mean, if you had bought calls on AMD, you're probably rolling in cash right now. And hopefully you cashed out. Hopefully you locked in profits. If you had shares of AMD, you're also living it up right now. I mean, I had neither, and I'm really feeling the FOMO right now. But Micron was down 5%. So if I had some collateral left, or when I say collateral, some cash reserves, I would have certainly opened up a cash you could put on Micron for not today as a 0 DTE, but for next Friday, because down 5%, you probably could have gotten in at some good strikes and some good premiums. Intel down 16%. I mean, that's part of the reason why AMD was up, because Intel just basically floundered their earnings session. And so if you're not buying Intel chips, well, you must be buying AMD. So AMD took off again like a rocket straight to the moon. But the other ticker that I do want to mention after we talk about AMD is TSM. And because TSM also rocketed up today, and that's because TSM is the manufacturer of the chips that I believe both Intel and AMD use. So it kind of rides the coattails of AMD's surge the past 2 days. But I mean, look at AMD. We opened up almost 8% at market open. Then we just bled up all day long. We ended up closing at just shy of $70. I think we were very close to hitting 70. I don't think we breached 70, but we were at like 69.83 at one point during power hour. But it looks like 70 right now is the new threshold. Who knows? Maybe we'll gap up and hit 70 at market open on Monday. But it's crazy. Literally days ago, we were talking about AMD in the low 50s. And now we're talking about AMD in the 70s. Absolute insanity. I was wishing to get assigned shares of stock in the high 40s, maybe low 50s. I thought low 50s was a little bit overpriced for AMD. Look at now. I would love to get shares of stock in the low 60s right now on AMD. It's crazy. But if you've seen my previous videos from this week, I think I am going to open up some cash secured puts on AMD on Monday because its earnings are on Tuesday after hours. So by selling puts on Monday, regardless if AMD goes up or down or sideways after earnings, I should be able to profit from just IV crush or implied volatility crush. Now, if you don't know what that means, I did a decent job explaining it in my video from last night, so go back and watch that. But basically, as a quick synopsis, volatility is one of the things that makes up an option's premium value. So let's just take a look at the options chain on AMD. So if I were to sell a put for July 31st, so AMD right now is at 69.13. So right now, an at-the-money put on AMD, let's say I was to sell it at the $69 strike, would get me $365 in premium value. It sucks because I wish I opened up a put yesterday because this was in the 500s. So it actually went down a little bit today. I'm hoping it goes back up on Monday because, again, it's closer to earnings day. But we'll see. 365 is not too shabby. I mean, just doing a quick math on that, 365 divided by the collateral, which would be 6,900, that's a return on risk of almost 5.3%. So crazy return on risk, crazy premiums right now. And I think it's a combination of earnings coming up for AMD and also the craziness that's happened in AMD in the past 2 days. So I think the two of those things combined have basically made AMD premiums super juicy. So I'm going to try and allocate a lot of my portfolio this coming week for AMD. At least that's what my strategy is, just because I want to take advantage of these premiums. And I mean, even if you want to play it safe, you could get a super low strike price on AMD and still collect a decent return on risk. I mean, let's say you wanted the $60 strike, let's just say, because you wanted about a $9 or $10 buffer from where AMD is. In case the stock does drop after earnings, you don't want to get assigned shares. I mean, just take a look, $65 divided by 6,000 in collateral. That's a return on risk of 1% still, almost 1.1%. I mean, you could go deep out of the money. I mean, let's just, for posterity, let's go to like 55. So that would be $22 divided by 5,500 in collateral. And that's exactly 0.4%. So if you've watched my videos from the past, you know that 0.4% is kind of my personal baseline, meaning it's the lowest I typically want to go in terms of making a play that's worthwhile, in my opinion. I could sell puts on AMD at the $55 strike price on Monday and collect roughly 0.4% return on my risk. I mean, these numbers are obviously going to change because right now the markets are closed, and depending on what we do over the weekend, these numbers are going to change when the market opens Monday. But roughly, I could be $15 away from where the stock price currently is trading and collect 0.4%. I mean, if you were to go back in time to collect a 0.4% return on risk on AMD, you were lucky if you were like $5 away from the stock price, you know? Now we're triple that, and that's just because the AMD premiums are so juicy right now. So if you really want to play it safe, let's say I want to play it safe. I don't want to get assigned shares of AMD because I think 70 or the high 60s right now. There's a lot of FOMO going on with AMD, and there's just a lot of a hype. And I don't think right now that AMD is a $60 or $70 stock. So let's say I want to play it safe in case, you know, people come to their senses, or there's a lot of profit taking or sector rotation or whatever you want to call it. And then the stock price of AMD drops considerably, maybe $5 or $10. Maybe it goes all the way down to 60, right? At 55, you would probably be very secure in that in a week, AMD won't drop $15. I mean, granted, never say never, right? Nobody knows anything about the stock market, right? Whether you're an analyst or an options trader or a stock trader, or if you've been doing stock trading for 50 years, nobody can predict the future. But just looking at the pure math, the $55 strike would give you a 0.4% return on the risk and approximately a 94% chance of profit. So that's pretty darn good odds, right? You're not going to find those kind of odds every day. So if I do decide to play it extra safe, like let's say some bad news comes out for the market in general over the weekend, and you know I'm feeling a little iffy, you could sell this 55 strike put and be pretty secure that you're going to get max profit. Granted, again, this is not financial advice. I will probably, depending on how much collateral, I have to figure out how much cash I still have left, because I had puts expiring today, which actually expired worthless, which I'll talk about in a second. So I should have a decent amount of money to open up a couple of contracts on AMD, maybe 2 or 3 contracts if my mental math is correct just off the top of my head. But I may, instead of doing all 3 at the same strike price, maybe I'll do like a low, medium, and a high risk play. So maybe I'll sell one that's closer to the money, like just throwing out random numbers here. Maybe I'll do like a 65, maybe I'll do a 60, and maybe a 55. That way, if AMD does drop, I won't get assigned on all 3 contracts, hopefully. And we'll see where we go. Or if I get assigned on 2 of the contracts, well, I could average cost basis down, right? Because I have 2 different strike prices. We'll have to see. You know, check back in with me on Sunday night on my Sunday night video to see what my play is, because we'll have to see what news comes over the weekend or how the market is looking over the weekend, especially after hours on Sunday night and then pre-market Monday morning. Things can always change minute by minute. But that's kind of where my head is right now in terms of my possible plays for next week. But AMD, gosh, AMD, Sube did it again. But let's take a look at my other plays that I had on this week. So I had a $140 strike put on IWM So IWM had a red day today, actually opened up in the red about down 0.7%, and then we bled off slowly all day long, and we ended up closing about 1.5% down. So we ended up closing around 145. So my 140 put was never at risk at any point during this week of being tested because I was pretty far out of the money. But if you remember from my previous videos, I collected $54 in premium for that put. So I just made $54 this week, which is fine by me. And then the other puts I had on were actually on AMD. And I had two $51 puts on AMD that expired today. And those were each for $65 in premium. So they obviously, by a large margin, expired worthless. So this week I made 65 plus 65 on my two AMD plays, plus 54 on my IWM play. So I made a total of $184, and I had $14,000 in collateral for my IWM play, and then I had $5,100 plus $5,100 for my two AMD plays. So I had $24,200 essentially at risk. So 184 divided by 24,200. So that means this week had a good week. I made about 0.8% return on my risk. Not too shabby, right? I mean, just to do some quick math, quick and dirty calculations, if I could do 0.8% every week for 52 weeks or the whole year, that would be almost a 40% return for a year, which is insane. That's unheard of. So I'm very happy with my plays this week. I like to say it was all skill, but it was a combination of skill and a whole lot of luck because I got really good strike prices, right? Both my AMD strike at 51 and my IWM strike at 140 were basically safe all week long. I was sleeping well every night because they were so far out of the money, and they were far out of the money because I sold them, or I opened those positions on red days. And not only on red days, but when it was oversold on the RSI indicator during the day. So typically I will keep an eye on the market during the market day, during the market hours when it's open. And if it's looking like a red day, not only do I look for red day, but I personally look for when the RSI at any point during the day goes towards the oversold category. Because that tells me that not only is it a red day, but it's like a red minute or a red 5 minutes, however you want to look at it. Meaning it's not only is it dipping for the day in general, but at that given point in the day, it's dipping as well. And usually, in my experience so far, when the RSI shows oversold while I'm watching it during the day, it always, never say never, but it never usually keeps like just continuously plummeting. It always comes back up even a little bit. So I try and lock in as much premium as I can when the RSI is oversold, and then also try and get in at the lowest strike price that I'm comfortable with. And that combination has served me well so far, like it did this week, in that I can lock in decent premiums for low strike prices, and then if the stock price rallies for the rest of the day or the rest of the week, then I'm usually pretty safe. I don't have to worry about my strikes getting tested or getting assigned shares. In the past, when I've gotten assigned shares, it's usually because we've had like an overall red week, meaning we've had a string of red days where the stock just continually bleeds off day after day. So, I mean, that's just my kind of strategy. Again, I'm no financial expert. This is not financial advice. This is just what I've noticed in the market and what I've been comfortable doing, and I've had decent success with it so far. But that's my strategy. That's my trading week so far. But the one stock that I want to tell you about was TSM, and that's Taiwan Semiconductor Manufacturing. And I actually added this to my watch list today. I don't know why I didn't think about this and I didn't add it sooner, but look at the 1 week graph on TSM. So you can see it's been pretty flat, and then this is when Intel earnings / the AMD pump happened, right? Because right after hours on yesterday, July 23rd, it gapped up by like 10%, and then it traded, it was, in the green today and sideways as well. So TSM, or Taiwan Semiconductor, actually manufactures the wafers for the semiconductor devices. So the way I think about it, and please someone correct me if I'm wrong, but they're the ones that supply AMD and Intel with the chips. Now, the one thing that kind of, I don't want to say scares me, but the one thing you have to keep in mind is that they're not a US based company. You see, they're based, I believe, in Taiwan. So just a heads up, because if you want to stick with all US based stocks because you don't, know, I don't know much about the Taiwan economy or the Taiwanese stock market, or how the Taiwanese economy is faring. Are they in a recession? Are they in a depression? Are they, I don't know much about them. And frankly, I don't know much about TSM as a company either. But I just learned recently that they're the ones that supply AMD and Intel with the chips. So kind of they ride the coattails, meaning if AMD or Intel is doing well, then you can kind of think of it as like, well, then TSM is going to do well, right? Because they're going to keep supplying more chips, or they need to keep up with the demand. If AMD is just selling like hotcakes, they need to keep buying chips from TSM, right, to sell their product. It's like an ingredient, kind of, if you want to think about it that way, for AMD and Intel. So I put this on my watch list. I haven't taken a look at the options chain yet. We can do it right now. But I mean, look how funny this is. Look at the, if you wanted to buy calls on TSM, look at the at the money call. It was up 14.8 thousand%. Crazy. It's all because of this AMD pump, that's been going on for the past 2 days. But the premiums on TSM right now aren't that shabby. I mean, let's just look at the at the money return on risk. That's $149 divided by 7,400 in collateral, and that would be a return on risk of about 2%. So not too bad. I mean, that's kind of online with what AMD usually is. AMD is usually in like the 1 to 2% range on like a quote unquote average day or average week. But I wonder if once this kind of like hype dies down, if TSM, if their premiums are going to go down as well. I mean, let's take a look at some of the volume. Yeah, this is what I suspected. The volume on TSM is not very high. So it's not a very popular stock to trade options on, actually. Because look at this, at the money, even though it gained like 14.8 thousand%, the volume is less than 1,000. I mean, let's take a look at, if we want to sell a put, what the volume is at the money. Yeah, it's a very low volume stock, 251. And actually, look at the open interest is none. So right now, there's actually no open contracts at the money put on TSM. So I just put on my watch list. I mean, the one other nice thing about this stock is, if you see my previous videos, I have like a decent number of stocks that are $50 or less, and then I have a lot of stocks that are over $100. I don't have a lot of decent stocks on my watch list that are from the $50 to $100 range, and so this kind of fit the bill at $74. And right now, AMD is also in that range, but that was one of the other reasons why I added to my watch list. I like to have a mix of stocks at varying price points, just so depending on how much cash I have left in my portfolio, I can consider allocating that to options on other stocks. But we'll see. I haven't opened any positions on TSM, and as of right now, I don't intend to. But I just put on my watch list just to keep an eye on it. So let me know if you guys have ever traded TSM and how it's treated you. But just looking at the options chain right now, it looks like it's not a very popular stock to trade options on. But maybe I'm missing something here. But yeah, that was my trading day today. That was my trading week this week. Overall, I had a good week. I'm happy with my results. Oh, I almost forgot. I actually did open a new position today because I had a little bit of cash left in my portfolio. So I actually sold 2 cash secured puts on Virgin Galactic at the $20.50 strike price. So I did what I just described earlier in the video, in that, I actually looked at my portfolio. I had enough collateral to sell 2 puts on Virgin Galactic, and it was just sitting in my account. And my original thought was, what? Virgin is having a red day. So again, a good day to open a put. Ideally, it would have been fantastic to do it right at the market open because it was down almost 8%. But the thought didn't occur to me to open up this position until later in the day. So I actually got in around this time, around like 2 o'clock-ish. And again, I waited for it to be oversold in the RSI curve. And I actually got in at the $26 strike price. Or sorry, $20.50 strike price, but for $26 of collateral. And my initial intention was just to scalp it for the day. So I was going to open a position around 2 p.m. If it rallies up or trades sideways for the rest of the day, I'll make like $5-10 hopefully, pay for my tacos tonight and just call it a day and close out the position before the market closes. But I decided to keep it on actually in those 3 hours from about 2 p.m. or I should say in about 2 hours, from about 2 p.m. to 4 p.m., I actually was profitable by 10 bucks. So I could have closed the position, but you know, it just wasn't worth it for 10 bucks. I said, you know what, let me let theta decay happen a little bit more, and maybe I'll close it out Monday morning, and hopefully by that point I'll make like a few more bucks. But so I sold this strike, the $20.50 put, and I sold it for 26. So right now it's about 22. So I say 10 bucks because the last time I checked, I was making $5 of profit per contract, and I sold 2 contracts. So currently, you know, I very rarely have options open over the weekend, but I do have 2 puts on Space right now that I'm holding over the weekend, and they're at $20.50 right now. Space is around 24. It's kind of been trading sideways at 24 all day long, so I'm pretty confident with that. I don't think Space is going to drop 4 bucks over the weekend, but you know, knock on wood. So that's my play. You know, if I'm not happy with it, or if I want to free up that cash to make more AMD plays potentially, I'll just close my position on Monday and, you know, make again a quick few bucks of profit. But yep, that was my trading day and trading week. As always, if you have any questions or comments, leave them below. The link for my Discord server, if you haven't checked it out, is in the description below as well. So make sure you check it out. There's a lot of cool people in there. We're discussing a lot of interesting topics, a lot of good trade ideas. So make sure you pop it in, check it out right now while it's free. And as always, happy trading.